Hi, my name is Amanda Fenner. I'm from HSBC for intermediaries, and I head up our South region and our large loan proposition. I'm really happy to be here today talking about how we can create lasting value and deeper customer relationships in what's considered stormy waters. Since lockdown, Knowledge Bank have reported over 20,000 criteria changes in the residential lending space alone. That's a significant number and a sign of just how complex the market is right now. Now, I think brokers have done an incredible job during the pandemic. I've worked in the intermediary market for over 20 years and never has the value of mortgage advice been more in demand or more important. I'd personally like to thank you for the support that you've shown HSBC throughout this year. Now, what I'm going to do today is take you through a high-level look at just some of the changes that we've seen this year and why we've been seeing some of them. We'll also look at what might lie ahead for our market, especially as lenders start to want more of your business again. Now, some of the things I'm going to talk about are predicated on the fact lenders will want more of your business at some point. Now, right now, capacity is stretched, and that has slowed down some lenders' appetite, but it won't stay that way for long. So some of the changes we need with criteria may take a little longer to deliver than others. Today, we'll look at some hints and tips on how you can work with the complexities of lending policy and how you can maximise the opportunity that comes with this ever-changing market. So let's start with what's changed and why. Now, as I said, Knowledge Bank have reported over 20,000 criteria changes over the last 8 months. Now, that's over double the amount we'd usually expect to see. You might say you need superhuman powers just to keep up. We've seen a pull on lending criteria, in particular for the self-employed, employed customers using annual bonuses, loan-to-value limits and loan-to-income ratios. Let's not forget, of course, lender scorecard changes. Now, when you look at the number of customers who've either taken advantage of a government scheme or who've had changes made to their income due to employee decisions, a quarter of employed workers were furloughed, 1.3 million businesses took a bounce back loan, 1.9 million payment holidays were granted. It's no wonder lenders are being more prudent and making lending decisions in order to ensure that we're ultimately protecting borrowers. Let's take a closer look at some of these pinch points. Now, bonuses and the ability to use a bonus for some clients can be the difference between them purchasing a 2 or a 3-bedroom property, or maybe moving into a catchment area of their desired school. But as some UK businesses continue to tread stormy waters, there's uncertainty as to whether or not employee bonus schemes will be available in their usual way. Now, when lenders are ready to compete again for your business, you might see the reintroduction of annual bonuses to lending policy, but the likelihood will be we'll want to see a bonus paid in 2021. That's in order to have the comfort that this isn't an income they're likely to lose. Now, in some cases, that could mean another 6 or more months away. So I think you can assume that there'll be a bit of a lull in this area until we start to see bonuses being paid. Look, in all honesty, I think we're going to get to a point where some lenders will say, if you can get me a letter from the employer to confirm you've a bonus being paid in a couple of months, then they'll look to take it. But lenders aren't quite at the point of wanting all your business just yet. You might also see some employers look at how they can remunerate their employees differently, and that's in order for them to safeguard top performers from leaving. Now, we certainly saw some of this in the credit crunch days, and it's one for our credit policy writers to keep an eye on. Self-employed clients have seen one of the biggest changes to lender assessment. The level of information and scrutiny needed to come to a lending decision is not insignificant, and outcomes aren't always certain at outset. Now, McKinsey reported that today, 80% of SMEs surveyed reported concerns of declining revenue in 2020. Now, at HSBC, we've tried to be as pragmatic as possible and utilise the expert eye and judgment of our skilled underwriting teams, but that comes with great pressure on service. In order to get as up-to-date a view on a client's business and compare it to pre-COVID times, the need for business bank statements has become a must-use tool. But in order to pull the correct information from these documents and manually assess them can take in the region of an hour and a half. Now, the impact on service is being felt across the market. Banks like HSBC are determined to keep helping our self-employed customers, but we must find ways to get an updated view without these time-draining processes. So technology enhancements will surely be pushed forward as we continue to work through these stormy waters. And the use of tools like open banking, where clients can share directly with us their banking history, uploading it directly into our servers, will take an underwriting assessment from an hour and a half to a quick and simple 10-minute job. Now, the outcome on the case will be the same, but we'll be able to deliver a much better customer journey and save you from having to make several touch points on just one case. But technology is only one component when it comes to assessing a self-employed case. As a broker, you'll be finding levels of information from each of your clients that far exceeds the 150 hard facts captured in an application form. And it's the depth of relationship with your client and the ability to articulate to us the softer detail that can indeed make all the difference as to how we assess your case. By spending an extra 5 minutes at the start of a lender's application in any free format section they may have, detailing the bigger picture will definitely help. For example, those bank statements we've just talked about, have you looked at them? What are they telling you about the business? Can you see activity coming in and out, and at what level? And is your client actually trading again? Do you know how their business has adapted during COVID, or what future contracts might look like? Is there an increase or decrease in profits? And do you understand why? Look, please don't wait for an underwriter to ask the question that you know is coming. Give the information up front, include accountants' letters of support if you have them, because if you've got a question for the client, you can bet the underwriter will have that same question for you. I think this level of detailed underwriting could be around for some time. I mean, if you think about it, a self-employed business owner doesn't have to file their 2021 accounts until January 2022. But we need to get better at helping certain types of businesses where the picture is far less complicated. So I think we could end up with a much more segmented lending approach. For example, if you're a GP, why would you need to supply business bank statements when you've continued to trade throughout the pandemic with very little, if any, impact on earnings? On the flip side, you could easily assume that a firm who have started to supply PPE are in a really positive position going forward. But what happens if, or hopefully when, a vaccine becomes available? Now, interestingly, McKinsey quotes finance and insurance as the least affected businesses from COVID, followed by professional services such as accountants, solicitors, and education. I think that's a really positive statistic for each of you watching today. Now, when it comes to loan to values and loan to incomes, I think this is an area that I'm sure each of you will have felt some effects of change for your clients. Lenders have taken a more prudent approach to new business. In fact, at some of the higher loan to values, they've made changes to LTIs, sometimes by not a huge amount, maybe just 0.25 on the income multiplier, but as a consequence, affordability has definitely reduced. Again, you're unlikely to see that come back until employment feels more solid and lenders want more of your business. As you'll know, HSBC never pulled out of the 90% lending space because of credit concerns. Now, that's a slightly different picture to other lenders. But for us, it became about capacity, the demand being far greater than we could serve alone, or with the help of just a few of our lender peers. Now, right now, 23% of all illustrations produced are for the 80 to 85% bracket. What that shows is the demand for lower deposit lending is still really high. So we eagerly await the arrival of more lenders back into this space, and we'll be back supporting the market as soon as that happens. We've already seen the government Help to Buy scheme be extended again. It's now available until March 2023. And of course, Boris has announced that he wants his government to help support Generation Buy with a first-time buyer scheme that offers long-term fixed rates at 95% loan to value. For those of you old enough to remember, you might instantly think back to the old MIG scheme. What's reassuring is first-time buyers and attainable property ownership is firmly on the agenda. So we'll watch with interest as the Prime Minister gives more of the finer details on his newest scheme. We've just touched on only 4 market areas that have been impacted since lockdown. And you can see that without even scratching the surface, the complexities are plentiful. Now, as I said at the start of this presentation, I think brokers have done an incredible job during this pandemic, and I can see today's customers being really loyal for some time to come. In fact, I can see the intermediated share of the market increasing as those clients who found themselves going direct to a lender in the past now find themselves waiting 3 or 4 weeks just to get an initial meeting. So the intermediary market looks set to be strong for some time to come, with more than 4 out of every 5 mortgages being written by a broker. So how can you maximise the opportunity that comes with today's market? Well, it wasn't that long ago that execution only was the topic on most brokers' lips, and the concern by many intermediaries was that the shift away from advice had the worrying potential for unintended outcomes. Well, I think this is a golden period for brokers. Customers need you more than ever. The importance of having a professional broker by your side to help navigate the market has never been greater. We've just seen you'd need more than good luck placing a self-employed application through a computer algorithm alone. The value that you create today is going to last you a lifetime, so now's the time to be cementing long-lasting client relationships. Look for every opportunity to re-engage with all of your clients, because there's no doubt most clients will not know what questions they should be asking you, or indeed when they should be asking, and they'll be looking to you to show them. Let me ask you this. Do your self-employed clients understand the implications to their mortgage borrowing based on how or when they submit their accounts? Do they need some comfort around technology advancements like open banking so that they're ready to embrace it when the time comes? Do your clients understand how taking on extra credit could affect their remortgage options? And do you want a mortgage book solely reliant on product transfers, or could you help maximise your clients' options by talking in advance of any usual client review date? And if you stood on the side of the fence which answered no when asked the question, will you be charging a client for the professional advice that you give? Now might be the time that you want to readdress this question and make a decision that best suits you, your business, and your clients. Look, there's no right or wrong answer to this question, but reflecting on it is surely a must. Now, there's no doubt that the way in which we interact with customers moving forward is changing. The mortgage interview, in fact, the whole process has lagged behind other industries from a technology and innovation point of view. But lockdown's changed all of that, and it's catapulted brokers into a digital age. Look, I think it's brilliant. It will make us all more efficient, and it will help protect your business from digital disruptors as we move forward. Now, what's also changed is the role of the lender's business development managers and how they interact with you. If ever there was a time to ensure that your relationship with the lender is cemented, it's now. The growing need to understand our policies, our plans, and appetite as we move forward through the pandemic and out the other side is crucial. And by telling a lender what your aspirations are and what you think could get in the way of you achieving them really helps us to understand what we need to do to help you get there. Whether that's additional support from our teams, new technology tools, or as simple as just being your voice to credit policy writers, please don't lose the chance to be heard. 20,000 policy changes in 8 months. Can you really be expected to know them all? Look, we've heard so many stories about how hard you're all working right now. So please let your relationship managers take some of the pressure from you so you can be the best possible broker for your clients. We will help you to package cases with an underwriter's questions in mind and talk through the documents that you want to upload, ensuring that they're fit for purpose before you send them on. At HSBC, we've expanded our business development team and now have 28 field-based BDMs who are currently working from home and an additional 9 telephone BDMs. You can see all of their smiling faces on screen now. You see, we know how important it is to be available to you so you can get your cases right first time. In fact, we're running a series of mini masterclasses where you can spend just 10 minutes exploring one topic at a time on key areas like self-employed or maybe foreign currency applications. Because we want you to feel invested in, but we also understand just how busy you are. Now, please utilise our websites and lending policy areas and make sure that you've checked our service before you submit a case so you can manage clients' expectations. Live chat has become a must-use tool. At HSBC have even changed our live chat. We can now give you case updates via that tool, which I'm sure all of your support teams will be really happy about. So we've just looked at quite a range of things to think of as we continue to move forward and out of 2020 into next year. But to summarise some of these points, I guess during a period of rapidly evolving market conditions, where change is one of the few constants, We know that being a mortgage and protection broker has never been more challenging. But from a customer perspective, the importance of having you by their side to help navigate the market really has never been greater. So engage with your relationship managers, rediscover the power of storytelling on your cases, and finally, remember that the value you create today will last a lifetime.